Good evening. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. As we speak, Treasury Consulting is a multinational headquartered group based out Singapore. Operationally speaking, we are a hedge fund. Rather, very soon we would be changing our designation as long short hedge fund. This is a very unique designation because today only the top banks of the globe can proudly say they are long short mutual fund, long short hedge fund. By long short hedge fund, we mean that fund holds the capability to take the buy side and the sell side position. As we speak, we are buy side. Probably it's a matter of weeks, rather 2 weeks max, we would be sell side also. So we would be long short mutual fund, long short hedge fund. Today, I would be covering a very important topic, rather a forecast. I did many forecasts, majority of the forecasts turned true. And I hardly bothers about the feedback, about the like, the count, the views, the comments on the YouTube, because to me these things are immaterial. Because every day when I wake up and see my LinkedIn profile, I see the bankers from Goldman Sachs, JP Morgan, Morgan Stanley, Lehman, Bank of America, Citi, ICICI, SBI, EY, KPMG, they viewed my profile. It means my message is moving in the right direction. And this is what I'm always looking forward. Soon, Indian mutual funds, especially Indian equity mutual funds, to be precise, would facing a huge fraud, rather a substantial degradation, I would say, a substantial degradation in the value of equity assets for multiple reasons. We have millions of investors worldwide who invest in equity mutual fund 200 rupees, 300 rupees, 1000 rupees, 2000 rupees, 10,000 rupees, 100,000 rupees, depend upon their pocket, nothing wrong. This money is collated in a pool called CIS, Collective Investment Schemes. And that fund manager invests in the stocks, example, Infosys, TCS, Wipro, and all these. But nowadays, there has been a trend. And as usual, the corrupt media is reluctant to speak. Of course, corrupt media is completely aware that the day they speak, this is exposed, like Axis Mutual Fund. And the practice is the fund managers are investing the retail investor money in loss-making startups. Of course, my research is going on. I am collating information from the Google, taking the printouts of the information, and very soon I came up with a lot of interesting facts. But one thing which I completely aware is that the mutual fund invested in Zomato, Paytm, Policy Bazaar, Nikea, and Cartrade. In all these 5 startups, mutual fund invested, and you know where is the share price. It is in many cases more than 75% down. So suppose a mutual fund invested 1 CR in Paytm. 1 CR, by the way, is a very small amount. And that 1 CR is now 25 lakh rupees. It means the value of 1 CR is 25 lakh. It means the rest 75 lakh is history. Now, mutual fund is also aware that the foreign institutional investors are continuously selling in India. So, as of today, which is 26th May, we got a report which suggests that in the last 8 months, foreign institutional investors sold near about 2.5 lakh crores. You heard me very right. 2.5 lakh crores, which is around 2.5 trillion rupees in Indian equities. Although my statistics is little different, my statistics suggest this amount is more than 2.5 trillion, but tomorrow I am going to be recomputing and then make additional video. But if I go with this number, then 2.5 trillion is definitely not a small amount. It may be a small amount for Indian media. God forbid if we go with the FOMC, and Federal Reserve said that in June and July, they would be hiking by 50 bips each, which means the US interest rate by end of July would be near about 1% more what they are today in dollar terms. Of course, RBI would retaliate. RBI would be hiking the rate, which means in either consideration, whether you look at RBI or you look at Federal Reserve, the market is set to fall. Because markets are not mentally prepared to digest this hike. That's a separate thing that the corrupt media is mentally prepared to digest this hike, even US media, including Bloomberg. Because I haven't seen Bloomberg talking about US debt, US current account deficit, the Afghanistan loss, the rising national debt, rising finance cost. The only thing they talk is the Fed. That's it. Anyways. In these circumstances, the value of the equity mutual funds will come down drastically. And it would create a stress, rather blow up better, for portfolio managers who have bought the loss-making companies. Just like recently, Delhi Very listed. And do you know that in the last 4 years, financial year, 18, 19, 20, 21 together, Delhi Very lost 3,200 crores. 3,200 crores. And still, mutual funds invested in Delhi Very. And whose money? It's a retail investor money. They are hardly bothered. So when this eventuality would happen, RBI would be hiking the rate, Federal Reserve would be hiking the rate, the market is set to come down. There is no doubt in this. Until otherwise, operators play an important role, and you can't vouch this. That's more important thing. Then the value of the equity mutual funds will come down drastically, which by the way is already coming down. And then it would blow up. And then the Indian investor would get the real sense of the value of their investments. And what the hell is the real sense? The real sense is the value they invested stands nowhere. I'm telling you right now, take a note of this. Because to me, it hardly bothers the count, the like, the views and all these things. To me, these things are immaterial. Not only on the YouTube, worldwide, all social platforms. But we are not heading, rather we are running towards a big disaster, I'm telling you. And this big disaster would this time be costing millions of investors. Millions of investors. This is Rahul Magan. 9899242978.